All right, today we're doing a deep dive into a really specific and honestly often confusing part of the US tax code. We're talking about the relationship between an individual taxpayer identification number, that's an ITIN, and the credit for other dependents. So let's get right into it. So this is the question that hits home for millions of taxpayers, right? You've got a dependent, you're supporting them, but they don't have a social security number. So is there any way to get a tax credit for them? Well, the short answer is yes, but the long answer is that the rules are incredibly precise, and that's exactly what we're gonna unpack right now. Here's our roadmap. We're gonna start with the basics of the ITIN itself. Then, we'll zero in on the massive difference between the child tax credit and the credit for other dependents. After that, we'll walk through exactly who qualifies, the step-by-step application process, the super important documentation rules, and finally, we'll wrap up with why getting this right really matters.
Okay, first things first. Before we can talk about credits, we have to understand the tool we're using. And that means understanding what an ITIN is, and just as critically, what it is not. Think of it as a very specialized tool for a very specific job.
So here's the official definition, straight from the IRS. It's a 9-digit number, and yeah, it's formatted to look just like a social security number, but its purpose is completely different. Its one and only job is to give people who can't get an SSN a way to file their federal taxes and comply with the law. That's it. Now, this is where it gets really important, because this slide cuts through so many myths. Getting an ITIN does not give you permission to work, it doesn't make you eligible for Social Security benefits, and it has absolutely zero impact on your immigration status. It is purely 100% a tool for tax reporting. Understanding that distinction is the key to everything else we're about to discuss.
Okay, now let's build on that and get to the real heart of our analysis today. You see, there are two tax credits that people always get mixed up, and a temporary change in the law created a huge distinction between them.
And boom, this slide lays it all out. This is the core mechanism. Before 2018, things were different, but the Tax Cuts and Jobs Act created this temporary fork in the road. For the main child tax credit, the CTC, your child absolutely must have a social security number. End of story. But for this limited time period, the law also created the Credit for Other Dependents, or OCD, which was specifically designed to accept a dependent with an ITIN.
And hey, don't just take my word for it. This quote is pulled directly from the IRS instructions for the ITIN application form. This one sentence is the legal bedrock for our entire conversation. It slams the door on the child tax credit for ITIN holders, but in doing that, it points them directly to the ODC as the right path to take.
So, we've established that the ODC is the goal here. The next logical question is, well, who exactly qualifies? Let's run through the checklist. These are basically the main gates you have to get through. First, the person has to meet the standard IRS definitions for being a qualifying child or relative. Second, pretty obviously, they can't be eligible for the main child tax credit. And third, and this is a really crucial detail, they must be a US resident alien or national. You know, for a lot of other tax rules, residents of Canada or Mexico are included, but not for the ODC. For this specific credit, they have to meet the US residency test. Okay, so you've done your homework, your dependent qualifies. Now for the most actionable part of this whole explainer, how to navigate what I like to call the application gauntlet. It's a process where the order you do things in is absolutely everything. Now this looks pretty simple on the surface, right? 4 steps, but the real magic, the part that makes it all work, is in that final action. You get your whole tax return ready, you list the dependent, but just leave their ID number blank. Then you fill out the Form W-7, which is the ITIN application. You gather up all your original or certified documents, and then, and this is the key, you put all of it into one single envelope and mail the entire package together.
I honestly cannot stress this enough. You cannot e-file your tax return and then mail in the ITIN application later. You can't mail the tax return one day and the W-7 the next. The IRS has to see the tax return that's claiming the credit physically attached to the application that's asking for the number to get that credit. Filing them separately is, without a doubt, one of the top reasons people get rejected.
And here is another one of those sneaky, non-obvious details that can completely sink your application. Because you're leaving the dependent's ID number blank on the return, a lot of tax software programs just won't automatically check the box to claim the credit for other dependents. The IRS specifically says you have to go in and manually check that box yourself. If you forget, the IRS looks at it and says, well, there's no tax benefit being claimed here, and they'll just deny the ITIN application. Okay, now we've reached what is often the biggest hurdle for pretty much everyone, the documents. The IRS is extremely strict about this, and you need to remember you're proving two separate things. So this table shows some of the documents that work. Notice that you have to prove both foreign status and identity. A passport is the superstar here. It's the only document that can do both all by itself. If you don't have a passport, you're going to need to come up with at least 2 different documents from the approved list to check both of those boxes. But, and this is a huge but, there's a critical exception. Even if your dependent has a perfectly valid passport, if that passport does not have a U.S. entry date stamp in it, it suddenly loses its superpower. It's no longer considered a standalone document. You then must submit extra proof of U.S. residency, like school records or medical records, along with the passport. This little detail trips up a massive number of applicants every year. So, after going through all of those hoops, all those rules, all that paperwork, why does any of this matter? Let's look at the real financial impact and what the future might hold for this whole thing. $500. That's the number. The credit for other dependents is a non-refundable credit, and it's worth up to $500 for every single qualifying dependent. Now, non-refundable means it can't give you a refund on its own, but it can directly wipe out your tax bill dollar for dollar. And for a lot of families, that is a really significant amount of money. And that brings us to the final and maybe the most crucial piece of context. This entire system we just walked through, this clear line between the SSN only child tax credit and the ITIN eligible ODC is temporary. It's on a timer. It was created by law back in 2018, and right now it's set to expire after the 2025 tax year. So unless Congress decides to act, the rules are going to change all over again. And that leaves us with a pretty big question, doesn't it? This specific credit created a clear pathway for families with ITIN dependents to get a tax benefit. With that pathway scheduled to just disappear, what's the tax landscape going to look like for them in the years ahead? It's a question that really highlights just how much tax legislation can directly impact millions of households.